Cool. So, welcome everybody to the Mastering Digital Insurance in 2021 webinar. I'm Kit Cox. I'm CEO of Enate. I am the less attractive replacement for Martin Boakes, who was going to be chairing this, but unfortunately has been struck down by the pandemic. He's all right, but he just can't do it today. And we're also a panelist down as well. So it's the nature of these times. But the good thing is we've got two absolutely fabulous people to be talking to for the next hour, and I'm sure we will have a really robust and interesting conversation. So I'll get Monika and Karl to introduce themselves in a second, but just a little reminder for everyone, I'd like this to be interactive actually, because we've got two experts on screen, but actually as of now we've got 114 experts online as well. So actually, I'm really interested in your questions and your challenges. So if you think what the guys are saying isn't right, tell us. So questions and those challenges can go in the Q&A box, and I'll just ask them across the team as they come in. Okay. So I'll ask folks to introduce themselves now. So Monika, do you want to go first? Tell us a bit about yourself and your background and what you do.
Thanks a lot, Kit. So, first of all, I have to say I'm not born in the insurance industry, as so many of my colleagues. So I'm not an insurance kid by birth. I'm coming from the FMCG industry. So I worked almost 20 years in the FMCG industry. Then I had my own business for 1 year, and then I joined the insurance industry. So I have the privilege, as I always say, to compare industries and see how you can do things in a different way. And of course, if you look at FMCG, they have been looking at customer and what the customer needs earlier than the insurance industry did. Currently, I'm working at Zurich Insurance, a big global insurance company, having almost 55 million, of course, employees. Present around the globe. I've been working as a global CX manager until end of 2019. Now I'm back in the business, which is also something which is unusual because normally people are either in a global function or at a country level. Mm-hmm. I think it's good if you switch, if you see different perspectives, also different functions. In my early life, I've also worked as a sales guy or woman. So I'm happy to contribute based on my experiences. And I'm also happy if people challenge, because I like challenges and good discussions.
Brilliant. Thank you, Monika. And Karl, tell us a bit about yourself and your background.
Thanks, Kit. Well, contrary to Monika, I actually am an insurance kid. So I've been in the insurance world almost most of my working life. So predominantly in the life, pensions and investment side of things. So started out in Zurich, in the Zurich family actually in London, and then moved back to Ireland. I worked with Aegon, which was a cross-border entity selling mostly into the UK, and also we set up an entity in Germany. And then more recently I was the CEO of Generali Link, which was basically the shared services center for Generali. We serviced business from Europe to South America to Asia, so very across the globe, and all the challenges that come with that. I think in my time in insurance, I think the biggest thing, the challenge that we have in the operations world was really, I suppose, the restrictive nature of insurance in terms of all the different regulations and the changing regulations, I suppose even more so after the financial crisis. So within the insurance world, I'm fully empathize with people in operations in insurance, the challenge that they're there. But also from an operations point of view, you're probably in the core of the operations, so you've got many different masters to please. But the other side of it, the opportunity I think on the insurance side of things is because of the nature of the products and the longevity of the products, there's a great opportunity to actually really make an impact on customers' lives. And I think that's the exciting part of insurance, if insurance can be exciting.
Yeah, brilliant. Thank you very much, Karl. And tiny snippet on my background. So obviously I'm CEO of a technology company, and we work with a number of participants in the insurance industry. So there's a corner of me that is proper technology geek by background, but actually, like you, Monika, I didn't start in the technology world. I was a manufacturing engineer to begin with, and it is always really interesting how things that you learn from a different corner of the world are strangely applicable across sectors. Love to pick out some of those things from you as we go through. So, getting into talking about digital insurance and what digital means for the insurance industry. So, we're not going to get into a conversation about it means this technology, that technology, because whilst lots of people think digital just means more online, actually it's more of a way of life thing, and it is more of a how you approach customers and the business thing. So let's start with one of the kind of essences of getting digital, which is speed and timeliness and being fast. And understanding how you see that sort of timeliness and drive against SLAs playing out across silos in teams, as products are being delivered across to customers. So how are you seeing that working and changes around that happening, Monika?
I mean, Karl, I know quite a lot about Generali as well, because I know Isabel Conner, who has also been at Zurich before. And what we started doing is introducing customer KPI, in this case, TNPS or NPS in general, in order to say, what does the customer want? Because in the end, it's not about only speed and timeliness. It is about what does the customer want, what do they expect, and then deliver against it. And this whole TNPS and RNPS methodology helped us to say, what does the customer journey look like? What kind of feedback do we get against the customer journey? Where are the major pain points? Where can we make the biggest difference? And of course, speed and timeliness is a big thing. I mean, if you file a claim and it takes you 3 weeks to get an answer if you get the money or not, this is not acceptable anymore today. And I'm just overdoing it in order to make the point. So the question is, how do I use data in order to convince the organization that we have to change something? Because it is clear for everybody that customer experience and customer expectations are important, but because everybody has their silo targets and we are still organized against departments and not against the customer, you have to find something in order to say, how do I unite the people and get them geared towards one goal. And we introduced NPS in 2013, big hype, everybody was happy, but if we are really honest, nothing happened. And the big change occurred when we put NPS into the incentive system, because then suddenly everybody came and said, oh, how does it work? And can I please understand? And how can I improve the whole thing? Yeah?
That's really interesting. How did you put NPS into the incentive system? Was it across the board, or was it aimed at certain roles?
So that was still when I had my global role. I talked to the CEO of the company, said, look, if you put customer centricity in all of your presentations, then you have to do something in order to get the people there. And we put a lot of pillars against this cultural transformation, but one of them was incentive system. And that, in my eyes, made the big difference, because insurance people are data driven. And if you don't have a number and they don't have a joint number, then it doesn't work.
Cool. And actually, we've had a really good question in from Oyvind. Thank you, Oyvind, saying, can we please explain acronyms when we're using them? So really good
sorry
point,
about that.
actually.
Sorry.
So NPS, Net Promoter Score.
Promoter System. Yeah.
And Monika, do you want to give the 60-second intro to NPS, because it is one of the most common ways that people measure their customer experience now. Everyone on this webinar, when Monika tells us how it works, will realize that they've been NPS'd a lot.
I'm really bad. Yeah, I mean, I hate all those abbreviations, and I'm using them as well. So NPS is Net Promoter System. And that means you ask your customers when they had a transaction with you how satisfied they were on a scale of 1 to 10. And 9 to 10 is very happy, of course, and they are seen as your promoters. And if you have detractors, of course, you have to look at them as well. But it's very important that you, when they have a transaction, understand if they were happy, yes or no.
That basic idea that actually if people score you 9 or 10, they're likely to tell their friends or their colleagues that this is a really good organization to do business with. If they score you 1 to 6, they're likely to be slagging you off in the background. Thanks Monika. Karl, on the life side, have you seen that focus on actually starting to measure the end customer experience?
Yeah, absolutely. I think similar to what Monika did, we started doing that, I think, back years ago in Aegon, actually. So looking back at, what is the NPS? What is the customer experience, I suppose? And I think Monika's covered it really well. So I'll kind of just move it on a little bit. And then we talked about, and Monika touched on there, is the customer journey piece. And I think when I moved to Generali, I suppose one of the things we came across very quickly was that departments seem to work in silos. So, each department had their own kind of SLA. And they're, in most parts, they're actually meeting those SLAs and everything was fine. But when you actually put it all together from a customer perspective, it was falling apart and it was taking excessively long time to do things. So one of the things that we looked at, and we had a great team looking at this, was actually measuring the end to end. So what is from the customer, when the customer signs the application form or claim form or whatever it is, to actually when they get the end product. So whether either the policy is live or the claim is paid, what is that experience? And what we'd found was that actually by explaining this to the teams, the silo mentality certainly dissipated, because at the end of the day, people are customers as well. So they understand, when you start using the term customer journey, somebody in the claims department or in your business department understands more that there is a customer at the end of it rather than a piece of paper. I think that's really, really important. And it's a bit of a mind shift for people. So once you start measuring the customer end-to-end journey and the little piece that everybody plays along the chain, but again, picking up on Monika's point, then by introducing measures on the customer journey, that's where you really see the transformation on the big benefit. Because if you have an end-to-end customer journey of say 4 weeks to get a new business case issued, that's not good. That's just not good. And chances are the customer will move on to somewhere else anyway. So you really, by pushing that down and getting it into a more acceptable level, everybody benefits. So I think that's really, really important. So taking the Monika's example there of the NPS and introducing it as measures, we did something similar on the customer journey and actually introducing measures on the back of that, and that was really, really powerful. And that's the language we started using, was the customer journey as opposed to the new business process.
Yeah, so that sounds like it's sort of a combination of measuring the output, the customer's experience of the NPS, and also measuring the inputs that you think are driving that.
Exactly. Yeah.
Like the customer journey times and stuff like that.
Yeah. I think it's essential, and I think once you do that, you can see transformation happening. So you can see, obviously, nobody wants, whether you're sitting in your business department or anywhere else, nobody wants 4 weeks for that's a crude example to get a new business case issued. So everybody wants to get it down into an acceptable level. And then what happens is that suddenly the phone calls stop coming in because people aren't chasing stuff. So people start having more time to deal with, existing queries or bigger queries, whatever, and the compliments then start coming in. So then your NPS then starts to go up. So it becomes self-perpetuating a little bit, but yeah, so I think for me, transformation-wise, looking at the kind of wider picture of what is the customer experience is huge. That's huge benefits, at a team, at a company, but also at an individual level as well.
That's a really good point. Now, actually, it's a really, really practical question coming in from Harry. Thanks, Harry. Which is about actually how do you what have you found is the best way of getting people to answer an NPS question for you? Is it better to email or ping them by SMS or those things? And probably a kind of follow up to that on them from me on measuring the customer journey of. Certainly a bunch of insurers that I've met and spoken to who will remain nameless. The quality of data that they had internally around measuring what's happening in the business was, I'm going to say, pretty low. Have you had to work on changing that quality of data internally as well to drive this initiative, Monika?
I would argue the quality of the data, and Karl, correct me if you see it differently, is not low.
No, I agree.
I think the challenge is that we, once again, have this data in silos and we don't look at it together. And I give you a very simple example. I mean, I measure relationship NPS, which is more like a market research, also including competitors. And then we have the transactional NPS at the touch points when a customer calls or has a transaction with us. Even those two data sets are right now not matched properly. Yeah. Let alone claims data, complaints, and whatever we have. So everything is looked at in silos. So I would challenge that the data quality is good, but how do we bring them together? Because there might be something which looks good at one end, but at the other end doesn't look good, which comes back to Karl's point about journey. Yeah? If you only measure the front end journey, but you have something at the back end which doesn't work, doesn't help you either. Yeah?
Yeah. Okay. Got you. So you that data's there, but it's packaged away, and bringing it together is part of the solution.
I think the big trick is to put it together. Yes.
Yeah. Cool. So, Karl, do you want to pick up on that thought? And actually, you've got another question coming in. Actually, what's a good NPS score for an insurer?
Yeah. Well, I think anything above 0 for an insurance company is good. I'm only joking. I think, anything in 20 plus, I think is really, really good. I think that's pretty good. I think someone like Netflix is probably getting a 40%, 40 score. So, in insurance world, I think there's the old adage, nobody wakes up in the morning, looks in the mirror and thinks about their insurance policy. But, consumers are looking for a good service when they do contact any company. So, I think pushing for a 10 plus is really good on an NPS score.
And actually, just for those who were asking the what is NPS question,
Sorry.
0 is neutral. It can go to minus 100 or plus 100. So plus 100 is everybody thinks you're extraordinary. Minus 100 is everybody's detracting.
Exactly. Yeah.
I have to do a bit of PR. Okay, we achieved plus 50 in Germany this year, so we're like
excellent.
Yeah. But this is because we had a clear focus on the pain points and taking care of them. So that's good. So everybody panics because, of course, we have to increase the score for 2021.
To be clear, that's a pretty extraordinary number.
Yeah, it is very high. Yes.
In this type of business, that is now short of spectacular. So, picking into that, are you seeing the benefits of that increase coming through, and what are the bottom line metrics that you're seeing that driving? Are you seeing increased revenue from it? Are you seeing changing your cost base from it? What
But we now want to do. I mean,
money?
I believe that we increased our attention and product density also increased. But can I say it's because of NPS right now? No. So what I'm doing now is starting to correlate, or at least match them together so that I can say there is something which is connected. Yeah. But I have to be careful because if you just say, oh, there's a correlation, you have to be very clear that you can prove it as well. So we are currently looking at models in order to put them together. But what I also want to say, by the way, and that is came to my mind when Karl talked about life insurance. I think one of the tricks in insurance, and that's something which I have on my agenda right now as well, to say, how do we increase frequency of touch? Because the big challenge is that we, especially in life, we sell people an insurance policy, then they have it for 20, 30 years, then they either get the money or they die or whatever happens. And I'm putting it a bit simplistic here. So, and some people don't even have, yearly contact points with us. So one of the questions I'm looking at right now is, how do we increase frequency of touch? And they're digital, and digital channels, of course, have a huge role to play as well, so they can build a relationship. Because if I don't have a relationship with the customer, how about loyalty? How about, some kind of, emotions, positive emotions, word of mouth, whatever we have, in relation to the customer. If I want customers to recommend me, I have to have a relationship, otherwise it doesn't work. So the big question is how to build that.
I think that's a really interesting challenge in a world where in some directions we are driving things to be ultra transactional. Go to this price comparison website, click through, bang, done. Yeah. Versus, at the other end, one of the other corners of digital, the other possibilities of digital is ultra personalized service. Going, actually, no, Karl, we're going to sit down with you as an insurer and tell us, let's understand you and what your risk profile is across everything you do, and we'll sort out something for you. Yeah. And life is kind of the, where that stems around. And then, so talk to us a bit about that, Karl. Yeah.
Well, I just touched on the NPS one a little bit. And I think a measure of that, I think we had a pretty good score back in when we were in Aegon, but it takes time to get there. It does, you're not going to get a really good score in the morning. But I think one of the things when we knew we cracked it, even though we were getting a good score, we knew we cracked it, was when our salespeople used to invite us along to their sales with new brokers. And that was a distinguishing factor. So suddenly service became a distinguishing factor. And I think that's a real measure of NPS. You can have your score and all that kind of stuff, but if you're bringing in new business or new relationships or whatever, that's the true benefit. And obviously, as Monika says, making sure that business then sticks. I think that's on the NPS one. On the second point there, Kit, I think, and again, Monika alluded to it, having a life insurance policy or a pension or investment policy, a little bit different than on the general side, you do have this longer term relationship with customers. So there's a huge opportunity, for the insurer to kind of actually make that relationship and that long-term relationship with those clients, and digital. And that could be, an email every now and again, or, obviously your valuation statements, annual valuation statements, making them a bit more personalized, using the tools that are there to actually make a more meaningful relationship with customers, I think is really, really huge opportunity, I think, for insurers, that some do, and I think, but a lot don't do. And I think that's a great benefit of where digital does actually enable insurers to do that.
Cool. Now I've got a couple of questions from the audience that I want to bring through. So one is, what solutions have you seen to connecting the data across the silos? And then internal cross-divisional incentives, or plugging into third-party services. What approaches have you adopted? Karl, do you want to?
Yeah, I think when we were in Generali, one of the issues that we have, obviously, it's an old company and they're around a while, so it comes with that. Unfortunately, there's lots of different legacy systems. So sometimes to answer a customer's phone call or take a broker, a broker might have called through and might have 3 questions which relation to 3 different clients. Those 3 different clients' data could reside in 3 different systems. So the poor person who answered that phone call has to go and find all that information in, and it could be delays and it could be slow. And going back to the broker experience as opposed to the customer experience, is not very, very good. So what we look for is a system that kind of overlaid that. So basically, it was a system that allowed us to kind of jump in and out of those legacy data systems, so that we could actually answer the phone call in one go. And actually what we found, just going back a little bit, what we found a little bit was that sometimes there were experts in some of the older legacy systems, so the phone call had to be transferred to those experts. So a really, really poor experience. So we look for a system that would sit, I suppose, a layer top would actually sit across it. So a bit like a CRM system, but it was deeper than that. It was actually a workflow and a measurement tool for us as well. And then, of course, we've built in our customer journey piece on top of that. So those systems are out there. I think what you have to do is obviously find one that works for you, but it's key, obviously, that it's linking into your legacy systems that pulls the data out. So your teams are actually just using that front end system as opposed to going into the legacy system.
So that orchestrate across the top of those systems, with data being brought forward.
Exactly. So and then if you actually think about it then as well, you're actually multi-skilling your own people then as well. So rather than having this siloed approach of having just an expert in one of these systems, legacy systems. You have people who are actually able to answer multiple queries. So from a productivity point of view, going into management speak, you're getting a lot more bang from your buck in terms of the people you have.
Got you. So actually, where you are, you might have previously been holding capacity with, well, we've got this team of experts that, and we have to have 10 of them because occasionally there's work for all 10. Yeah. But actually, when there isn't, you were able to use those systems to do some balancing across that.
Exactly. Yeah. And it's better for them. It's better for them as well. They're learning more, and they're, unfortunately they become a little bit more marketable, so you have to do more to keep them. But but that's a good challenge to have.
Well, we're all in that game, aren't we? We're all in that game. Yeah. Monika, have you got something you want to chip in on that point? If not, I've got another question from the audience as well.
No, I'm fully with Karl, because the same thing at Zurich. Yeah, so you have to put layers on top and then find synergies. So same thing. Yeah. Well put, Karl. I think we all have the same challenges.
Well, that's it. Yeah, never easy.
So one of the other questions that's come through, Paul, thank you very much for this, is, so given the inherent complexities of digitizing the insurance value chain, particularly in the specialty and complex end of the market, do we think that a fully digitized model can be realized in this area? Yeah. So Karl, you've been more towards the more complex end. I've recently been doing stuff with some London market participants, so I'll chip in on this in a minute. So,
I think there's anything can be digitized, but I think it goes back to Kit's point. I mean, what is digital? Is it a fancy website, or being able to do chat and so on? But for me, that's kind of just not digital. That's only a small part of it. It's more about the actual process. So how do you actually get the processes to kind of work in a way? And you will always need humans, thank God. So you will always need humans to look at certain thing, and particularly on the complex end of things, you will have certain scenarios where a computer or a robot even will not be able to work that out. So, but you can be smart about things, and I think that's the most important thing. So it's understanding, I suppose, your process landscape and understanding then what can be done and what can't be done from a digital perspective. But I would say that there's no reason why anything cannot be digitalized.
Yeah, and actually, so from my recent experience with some London market participants, actually what we're looking to do there is that digital is very much about enabling the underwriters to do what they do, and just so helping with clarity, visibility, control, all of those things, so that they actually get more of their brain space focused on the stuff that they're excellent at. And there's also the smoothing things and joining stuff across scenarios. So exactly that, putting a layer across. It's exactly what we're seeing there of a layer going across underwriters, compliance, modeling, etc., all the way through. Because actually, unless you're seeing, there's still an end-to-end customer journey in there, and middle might with a broker, but it's still an end-to-end customer journey to handle.
I think just another point on that. I think sometimes, because working in the insurance world, I mean, there is obviously operational risk is a key element within that, and as most people will know, under Solvency II, you have to keep a certain amount of cash under the bed for operational risk, and a key challenge for on the operational side of things is how to actually reduce that. So how to reduce the need of the company to hold extra capital for operational risks, and by doing this approach, by having that end-to-end approach, you can engage with your finance and your risk colleagues and your compliance colleagues to help to drive down that need to hold extra capital from an operational risk perspective, which suddenly makes you a very popular member with the board.
So actually, are we basically talking about digital approaches to write better business?
Absolutely.
Yes, of course.
And so is that something that you've been looking at as well, Monika?
I give you another example, because I think, and that everybody has done as well, and I think in some cases really successful. We have those traditional companies like Generali, like Zurich, like Allianz, that have to fix their legacy systems in the history. And then we have the newer companies, tech companies, that help us to challenge the ways we are dealing with business. And we started a corporation and also bought parts of the company in 2017 of a company called Cover Wallet, New York-based company that not everybody knows. If I say Lemonade, most of you will know. They specialized on small business. Small business was something where we were not that good, so I could use them in order to say, how can we do it differently and challenge the conventional. They always worked together with traditional companies, but what they did had a front end where you could fully digitize the customer journey. So it started with, you went online, first pillar was peer-to-peer comparison. So if I'm a hairdresser in New York in this area, what do other hairdressers do? What kind of insurance policies do I need? So that I have some kind of view, what are my needs that are not based on somebody selling something to me where I'm not 100% sure, do I really need it or not, or do I have coverage enough? The second pillar was then a quote and buy, which was combined, by the way, with a call center. You know? We always said, oh, it's a digital business, but the big trick was in the end also the call center and behind, because it was about 1090 in the beginning and then 2080 in the end. But the 80% was still people call center, which I thought was also very interesting. And then you had a wallet, and this is why it's Cover Wallet, where you could store everything, because that is a big pain point as well, that you still have your perms in the back here, where you have to store the paper because everybody's sending you paper still. And that was a good challenge for us to say, how can I do SME business differently? And I also learned a lot about conversion rates. Yeah, how do I get the people online? How do I convert them to sales? Which I couldn't have done in my traditional business. So I think it's good that you sometimes have challenges that then help you to see things differently, which you can then apply to your traditional business as well. Yeah.
Gotcha. And Alex, just hitting on that conversion rate thing, because we've got a question in around conversion rates specifically. Looking at the B2B2C channel, yeah, so where you're tacking insurance onto a smartphone, or you're buying insurance when you buy your washing machine, so you're seeing conversion rates in double digits, but in the pure digital channel, seeing conversion rates in the single digits. What's your experience of that, and what do you think we can do to get conversion rates up to double-digit levels across the digital channel?
To be honest, right now, I still believe in this triangle of digital call centers and then also physical agents sometimes. And I give you another example. We now have a very successful partnership with MediaMarkt Saturn, where we exactly sell those device insurances. Yeah? Whenever you buy a fridge, a camera, or whatever, then you can sell a device insurance as well. If I let people buy something purely online, my conversion rates are, I don't know, 3-4%. The minute I send them to a store, physical store, which is hopefully possible again in 2 months' time, conversion rates are up to 14%. Yeah? Big difference, because still this people-to-people works. Yeah? And if you train people well, then it's good.
Yeah, it's actually back to that. What are our experiences across different industries? Everyone thinks of these extraordinary digital businesses, whether it's Airbnb or Uber or whatever. It'd be beautiful, pure play digital masterpiece until you go to the Airbnb contact center, which is vast. Yeah, and is so much of the engine room of what happens behind the scenes. So let's not kid ourselves that the glorious shiny technical front door actually is what's needed to convert business.
I mean, communication is not that easy, even if you do it person to person. And if you have something online, sometimes people don't understand, or they believe something different is behind it, whatever. Yeah? So I think you need multiple ways for the customer to access your information, your company, your products, whatever. And you have to give them the choice. And it's not just shutting down everything to online, and then if you want to call somebody, you take 10 minutes in order to reach somebody. I mean, just a recent example, I'm using an online broker for my shares, which I sometimes buy, and I had a problem the other day. I was not able to reach them. Yeah, that annoys me so much that I almost switched banks again. Yeah? I mean, don't do that to me. Yeah, I understand it's easier and they are cheaper and whatever. Yeah, but if I'm not able to reach them when I have a problem, yeah, then I'm gone. Yeah.
Yeah, we all have those frustrating customer experiences, don't we? And just think about every viral customer experience that you've seen. Yeah, where somebody's published something on LinkedIn, or you've seen it pop up on your Facebook feed or whatever. I think when you think through it, every single one is where a genuine human has chosen to break the rules. Yeah. To deliver an extraordinary experience that was above and beyond what they would normally give. Yeah. So understanding that's really powerful. Karl, you.
Yeah, and I think that goes back to previous points, more on the life side, obviously, than the general side. But I think, by introducing efficiencies, and by that I mean more time for people, that it allows our people, who are answering the phone call or dealing the email, to add that extra layer of value-added service, and that's where you make a difference. That's where you get your customers to either stay with you or buy more, or your brokers actually introduce more business to you. So, bringing it back to the digital point, by introducing internal, I suppose, digitalization, which is really, getting computers to do more for you, allows you to utilize your resource better to actually drive more business and a better experience.
Cool. Yeah, that. I mean, I know a bit about what you did at Generali there, and that approach of all sorts of classical measures in classical input measures of how long are our people spending on the phone with customers. We need these calls done in 10 minutes. Actually going, hold on, that's not a good measure of what good is. Let's use the capacity we create to allow our people to spend more time with our customers and brokers. And guess what? That's a way to doing more business.
Yeah. So you mean your phone calls will go down. So for example, the number of calls will go down, but your call volume will actually, the length of time your calls will actually extend. And what that means is that the broker, the customer, is just, the person on the phone, first of all, is a lot more relaxed and is in control of what's happening. So the broker and the customer is actually, enjoying the experience a lot more. And for us, I mean, the fulfillment of that, or the realization of that, was we started getting customer compliments coming through. So we put them up on a notice board, and I think within 2 months we had to get a second notice board, because there was so many positive stuff coming through. That's
powerful. That's a question to go across to go across to everybody. If anybody gets lots of compliments coming through, put something about that in the Q&A, because actually where you've got customers sending you compliments about how great your service is, that is an awesome experience. I've got a specific question for you, Karl, actually from Angelo, which is, how can we use digitization and digital approaches to drive better solvency ratio in life?
Well, I think it goes back to that point. It's about understanding how an operation impacts the solvency and the capital that has to be set aside, and that tends to be for operational risk procedures. So, and a certain amount of the actuaries and in conjunction with the regulator on the board will decide, we're not comfortable with some of these processes, so could be a bit iffy. So we need to basically put aside some capital here if something was to go wrong. So, from an operational point of view, you should understand what processes or what scenarios your actuaries or so on have actually decided in their esteemed wisdom is actually risk, a high risk, and those are the ones potentially you go after. By go after, I mean you improve the processes around that, and then the value add that you can give from an operational expertise is actually by delivering something which actually, whether it's automation or digitalization, as someone was asked, it actually helps to reduce that. So suddenly you're reducing capital that the company's having to put aside, which actually can be used for something else. And that capital that's actually saved could actually be for you to actually invest in your operation a little bit more as well. So you just have to think through, understand, what are they actually doing? Why are they putting money aside? What's the rationale for doing that? How can I actually convince them and the regulator that actually you don't need to do that because we've improved it, we've introduced systems to get around that. But you know what, that capital I've saved you, can we use that to actually improve the processes and the systems even more?
Gotcha. That sounds like so much of it is down to your very deliberate action and process around that data. Yeah,
absolutely.
And that's one of the other things that digital is about making improvement deliberate and regular.
Yes, exactly.
Cool. Really interesting. I know we've got some questions coming in around AI and automation, and I actually want to come to AI and automation in a minute. Yeah, so those who've asked, don't fear, we'll get there. One thing I want to touch on first, though, is how our organisations help or hinder us taking a more digital approach. Now, I know both Zurich and Generali are both very federated organisations, and but at times in history have had dalliances with being less federated, and it seems to be for lots of insurers we're on this endless cycle of local control, central control, local control, central control. What are your experiences of delivering digital change and joined up customer experience in those federated environments, and what does good look like? Is it good to be federated because you're focusing on your customer in a country, or actually is it good to take a global approach? Monika, do you want to kick off on that?
Oh, I'm a big believer in global approaches. You won't believe it.
Yeah, you got a global job, so you got to say that.
That I have a local job now, so.
Of course, yeah.
So, but I had a global job at Unilever already, and I had a global job for the last 6 years at Zurich. I'm a big believer in global frameworks if you create a win situation. I don't believe in things where you do something and then force it into the countries. And that is unfortunately often very much the case. You have to create something where you say, I do it because then it's better and cheaper for you. And I always use this term of freedom within a framework. So if you have a certain framework, using Salesforce in all the countries, which is a marketing automation platform, or we used Sitecore for our websites, also global approach, but then local usage, where we got a better price because we did global negotiation. And then we create synergies of scale with certain things, and I'll come to that in a minute. Or even the brand framework. I had an image bank after some time, and not everybody had to create motor images or live images or whatever you have. So I think you can create examples where you say it's better to work together, and not every country has to do the same. And it's proven that it's cheaper and you can increase the quality. Because you cannot do everything on your own in a country, especially not if you don't have the expertise.
So if that's what good looks like, what we did is create a so-called suite of services. Okay. So we, for example, some countries started to use chatbots 5 years ago. And I said, it doesn't make any sense if everybody creates a chatbot. At least put some wireframes into the suite of services, gives people some examples how to do it, and then people can pick and choose what they want to do in their countries. Same thing with the customer journey framework. 5 years ago, to be honest, nobody really used it. Today, everybody's using it because we put it there and then we said, here are the tools, and we had some workshops as well. Does that mean I can do it in all the cases? No, I can't, but at least try to find the synergies instead of doing everything on your own. And that's something I learned over the years now. And with this whole digital space, and especially also AI and automation, you don't have a chance anymore if you want to do it on your own. I'm sorry, but that's my belief. So if the global approach is good, why are so many businesses still so federated and locally organized?
I think because we did a lot of mistakes. In a lot of cases, we forced countries to do things which in the end were too expensive and didn't work well.
So
I mean, you have to prove the case. It's the same thing as with the customer, yeah? Prove the case. If you don't prove the case and people suffer and it doesn't work, then you are in trouble, yeah?
So actually that relates across to a great question from Andrew, saying for global rollout, so where you've got one of these global initiatives, what mechanisms do you do to use to help influence local markets and local leaders to adopt the change? Yeah, and I know, Karl, you ran directly into this set of fun and games. So, yeah.
Well, I mean,
exactly
I think you know, I would totally concur with what Monika is saying there. I mean, a global approach is the best approach. It's cheaper, it's faster, it's quicker, and obviously you can use learnings from other countries to actually expedite your own rollout. However, you know, I think as you say in their case, you know, a lot of in the Insurers world, there's a lot of federated entities, so the local businesses have a lot of sway and a lot of power in terms of what gets into each business. So if you take it, for me, it's always the 80-20 rule. That's the way I always look at things, you know. So 80% of what the corporate is rolling out is probably can be used across every entity. There's that's 20% is probably your local variation that probably changes a little bit, and that actually goes right through to even to policies, you know, and products, because, you know, on the product side of things, you know, because of, you know, if you're working within the EU, for example, you know, and obviously the UK is just out of it, but it's quite similar. You know, if you look at AML requirements, you know, everything is the same. You know, there's a local variation, which tends to be more around tax and local laws, so it's not that much. But it is roughly around 80-20. So if you take that approach, and I think that's a lesson, you know, certainly when I was working with Generali, I was split in two from a head office perspective, but also from the local office. You know, if we took that approach, I think it takes something a lot better, and the local entities need to understand that you know, they are actually going to benefit huge by this investment by the corporate head office, as opposed to them going out, you know, and for example negotiating a contract directly with Salesforce, which they'll end up paying, you know, what the local the local factory is paying rather than what the corporate is paying, you know. So it does not make sense. So taking that approach, I believe the 80-20 approach, where 80% of it is actually can be used across the globe, and the 20%, which could diminish, which could be smaller, as a local variant, I think is the right approach to do.
So I'm going to challenge you both on one of these points, because
come on.
because doing things globally is faster doesn't sound quite right. What I could believe is that, yeah, if we look 5 years out into the future, we might be further down the track if we took a global approach than we would if we took a local approach. But actually, if we look a year down the track, do we really get things done faster globally? You know, my experience of doing global rollouts, it just means you get more inertia getting in the way of people making change.
But I think it depends what the incentive is for the local entity. You know, I think that's really, really important. So, you know, I think as Monika said there, it shouldn't be forced on them. You know, I think that's an important thing. So, I mean, I think you will always have, whenever change is rolled out, you will always have the evangelists and the pessimists. So you focus on the evangelists, and those evangelists could be certain countries, and you know, who are open to this change. So for you, for a corporate perspective, it's more or less a proof of concept. So you're using that country as a kind of a proof of concept, and then you're using them as evangelists, as a local business with other local businesses around the world. And I think that's the approach that we take.
Create your pathfinders.
Exactly.
Light them up like Christmas trees, he says, using too many metaphors, and everybody will flock around them.
Absolutely.
Yeah, fully agree, Karl. And when we had projects that were completely new and a bit challenging, I always had 1 or 2 pilot countries, tested with them, and then went into storytelling with the other countries and said, look, this is what we achieved. This is your advantage. That's the win-win situation. And as Karl said, I mean, you have to convince the countries that it's good for them and that there's a value to bring. But I have to say, 10 years ago, when we started this global approach a bit more seriously, we did a lot of force fitting, and that doesn't work. I like the 80-20, Karl.
Yeah. I think I start when it gets to 90-10, but start with 80-20 anyway.
Yeah, I think that is a really, really valid approach to go. Recognize that you're not forcing it. but you are leading by example. Recognize that you must allow people some local flexibility, because there are things that are genuinely different. Even down to buying behaviors in different geos can be very different. And your messaging, your branding can be the same, but your messaging might just need to be different in different.
And there's also a cultural aspect, by the way. So when I first started, I had a conversation where somebody said to me, "Oh, we have to educate the countries, and we have to tell the countries because they don't know how to do it." And I'm like, I don't think that's the case. I think the countries know exactly what they want to do. Yeah. And in the end, I'm sorry, but they earn the money. I mean, you're sitting here at corporate center and you get their money, but they have to earn the money for you. So I would be very careful how you communicate with them. And if you start saying we have to educate you, I don't think it's the right approach.
Yes, the back text to "we have to educate you" is "you're a bit thick at the moment." And I mean, I had a huge conversation with that guy, who then also decided to leave the company, by the way. But I'm like, I'd like to be on the other side of that huge conversation.
But I'm like, I mean, that is something which is completely alien to me. Like for me, it's a partnership also between the countries and the group and global. And if you start, I am so smart and I have to educate you, I think culturally that doesn't work either. So it doesn't work at all.
Yeah, very, very good. So now I'm just checking across on a couple of questions. So one thing, whilst we're on organisation and changes around the world, and then we'll hit automation in a second. One question is, have you seen digital approaches or digitalisation allowing you to open up markets that you didn't previously have access to by, for example, you didn't have feet on the street salespeople or physical presence or anything like that? Have you experienced that, Monika?
I mean, this case was really the SME, the small business experience we had with Cover Wallet in the US. And especially in the US, we have a big commercial business, but we neglected the small business owners a little bit. So that was a good approach. So I think you can use digital to challenge areas where your traditional business is not that good or you're not present, and then use the new models in order to go there. Yes.
And I particularly like that that approach that you took there of finding the right partner so you don't have to to shortcut doing the thinking. Feels like a smart move.
Yeah, it worked. Yeah, I mean, based on their numbers, I could say
that's why it feels like a smart. Yeah. Good. So let's move on to just talk about automation and orchestration then. So differentiating the two. So we talked about orchestration a bit, this idea of getting control of end to end across the silos, and then automation being bringing individual technologies to bear to automate parts of our process. So we've got one particular question in saying, what business value do you see using AI in insurance businesses? And I'm going to open that to you both, but by saying what I normally, my normal intro to AI as a subject matter is AI is not a thing. AI is a basket term for lots and lots of little technologies that all want to grab a little version of that word. So AI, it really breaks down to different skill sets. As a person, you can bring different skill sets to the world, whether it's your ability at the simplest level to follow rules and type, to your ability to read and understand long form language, to your ability to have a two-way conversation like we're doing at the moment, to your ability to empathize with another human. Now, each of those are technologies that you can bring different corners of the AI universe to, whether it's RPA to the follow rules and typing bit, through to classical machine learning to spot patterns, to, for example, make decisions in risk processes, through to natural language processing, chatbots. And each of them are different technologies that you buy from a different vendor with different capabilities. that you might want to orchestrate altogether. So within that framework, calling all of those different technologies AI, where do you guys see uses coming through and actual people bringing value from these technologies?
Well, I can dig in first off. I think from the world I've seen is where you know, a lot of traditional insurers around a long time, and what I said earlier on, probably not so much investment on the operation side of things. So we're using a lot of legacy type systems. So, you know, we talked about a little bit of the orchestrator and that kind of layer at the top. So somehow you need to be able to communicate between that layer at the top and the bits underneath. So, you know, AI could be things like, as you mentioned there, robotic process automation. So you're using robots to actually, you know, get data for you or to pull data for you. So, you know, what that allows you to do, and an example would be, you know, reconciliations within the investment world. So if you've got a number of different funds and you do reconciliation on bank accounts or on funds, that, you know, using a robot allows you to do that and do it pretty well. What does that do? That actually frees up a human. A human is then freed up to actually do something a little more value add. So that's, I think, is a huge, that's one example of where, you know, AI in the guise of robotic process automation can be used. And there's other examples, you know, in Generali in the UK, they use a system called My Drive, which is basically, you know, it helps the people to drive down what their insurance premiums are. You know, there's a little device in the car which makes sure that, you know, if they go over 50 miles an hour, you know, the car explodes. Not quite, but, you know, but that's the kind of thing that they're doing. So there is different examples of where AI can actually help to actually, number one, drive efficiency, but number two, give you a market edge.
Cool, thanks, Karl. What are you seeing in that world, Monika?
I mean, for me, it's a question of where is it? Do we use it? I mean, I think it's everywhere by now. And I give you one very practical example. When I started in the insurance industry 13 years ago, we didn't even have customer count. We only had policy numbers. Yeah? So I was asked to build a customer cube, customer data, CLTV modeling, all that. And I was very proud that I at least had my basic framework. Then I went off to Zurich for 6 years, came back, and suddenly this customer data team has an AI expert. Everybody is experimenting with AI applications. And I'm like, oh, the world has changed relatively quickly. Yeah? It's a small example. And that is happening in claims. It's happening in operations as well. So everybody's experimenting. Do we do everything on big scale yet? No, not yet. But I think it's good that we learn and then adapt and say, how do we best use it?
Yeah, and what, you know, we're seeing in just some examples that we're seeing of uses. So I'm going to pick one from that very complicated London market world where we're seeing some smart some machine learning based data extraction working across schedules to mean that people don't have to read through and extract the sensible information from them and then get it wrong. So being able to actually get a more standard approach to understanding the risk that's coming across from the market. Yeah. In the more consumer end, you're able to, we're seeing some insurers doing a really smart job of using ML from multiple other data sources. So not just their own data, but to really understand their customers more and be able to suggest more tailored products to them. Yeah. But actually, what the reality is that if we take that AI spectrum, what we're really seeing in the market at the moment is people adopting the deterministic end of it. Yeah, so it's things like RPA and chatbots. Being that, and what I mean by deterministic is you get an input, you know what the output's going to be. Yeah. The wider adoption beyond kind of tinkering and points of interest of machine learning and deep learning not yet really coming through. Natural language is definitely starting to come through much more into operations because that's made simple by having the right orchestration layer in place and being able to make use of the services that Azure are bringing to the market and Google are bringing to the market and AWS are bringing to the market. So I'm now conscious that we've hit the top of the hour. and we've therefore run out of time. And we did have a few questions left over. I'm very sorry for those that we didn't get to those questions. If you've got any questions that we didn't hit and you still want to hear the answer to, or actually anything else that's come to your mind that you want to bounce off the panelists, please share them in the chat, and we will get answers collated and get them back to you at the end of this.
And by the way, I'm also very active on LinkedIn, so ask the questions on LinkedIn,
yeah.
I will answer.
Yeah,
Very good.
perfect, brilliant. And just to say, Monika, thank you ever so much for your time. It's been an absolute pleasure, listening to your wise words. And Karl, absolutely the same. Been really good talking and hearing to you about the perspective on digital from the life world.
Great. Thank you, Kit.
Karl and Kit, thanks a lot.
Thanks a lot, guys.
Bye.